Hey there, YouTube family. Stocks with Josh here. Well, markets have suffered another bear attack. Many blue chip companies getting mauled to their 52-week lows. We know this week the Fed's trying to out-hawk the hawks, suggesting a terminal rate between 4 to 6% by year's end. Mortgage rates hit a 6.29% today. Jobless claims rose slightly, and the world central banks rose their rates following the Fed's rate hike. UK consumer confidence hit a record low, with the largest concern being a growing energy crisis. And of course, the US dollar's broken out, hitting new highs, looming over the falling markets. Even though the markets were down, if you followed this page, you are not scared because we were prepared. Greetings, my friends. As you can see, I'm traveling. I've got a good video for you. Hit that like, the subscribe, and the notification bell, and say hi in the comments. My last video generated quite a few questions, and I did my best to answer as many of them as I possibly could. A lot of you guys broke the rules. You gave me your entire portfolio to analyze, but I did respond to quite a few of you guys. But I'm going to cover a number of stocks that were very popular in the comment section today. All right, let's start off with our big beloved Verb play. I was getting a lot of questions on Verb. Did I sell it? I want to point out that even at its drop to 45 cents, Verb is 50% up from its all-time June lows. So what does that tell us if a stock didn't make a new 52-week low in the last 3 days when the markets were just falling? It may be on the move up. I bought Verb on this dip, and as you can already see, it's running back up at the close of today. SoFi was a popular request, and I'm not going to say too much about SoFi other than the company's simply being punished because the government forgave student loans. The market thinks that there's going to be a setback in earnings. It's a really good company, and if you are in it for the long haul, you're probably going to see a great long period of tight price consolidation around its current level, and at some point it's going to break out and be very profitable. Norwegian Cruise Line Holdings, NCLH, is sitting nicely above its June lows. And as I told you guys before, I had previously sold my options for a 300% gain. I have acquired the same level of options that I had before, and I'm looking forward to some profits in that. In addition, an analyst by the name of Patrick Scholes upgraded Norwegian from a hold to a buy and provided a potential target price between $17 and $19. All right, we chose not to get into Alibaba last week when it failed to break out above $89, and that saved us $10. I was able to get back into it over the last 24 hours and accumulate a very nice position of call options going into next week. Interesting regarding Mullen, which I talked about recently, and I predicted over 2 months ago that it would hit a strike price of 36 cents. Well, that price was hit today and it bounced. That was a very precise technical call. I got a text message from a friend who said he decided to play Mullen on my target price of 36 cents. He bought it, enjoyed a nice little bounce profit, and sold it. In my lightning round technicals at the beginning of the week, I said that if the market dropped hard this week, that NEO could go back to its support trend line of $17.50. It did that, it bounced, and I just want to mention that I think it's far more likely that we will see a $24 NEO from this point forward than we are to see a $14 NEO. I'll just leave it at that. One of the most popular questions that I got was, does the stock cycle work for cryptos? The answer to that is yes, but with some exceptions. When we consider our investments into crypto, we also have to view them in light of the bear winter as well as the coming bull run. I will say that if you take what I shared in my last video and you apply it to your crypto investments, you will see that at some point there are cryptos that are definitely outperforming others. It's easy to use XRP as an example of that when the markets are falling and it's nowhere near its June lows. Obviously, it's telling us that XRP is near a breakout. Does that mean that you should cut losses on every crypto that's making a new low? Not necessarily, because in crypto, diversification is pretty important. You have to spread out your investments over more than one project because many cryptos will fail and some will do better than others and some will 10x in the next bull run. And finally, the number one question that I need to review is blue chip stocks: Apple, Google, Microsoft, Disney, Nvidia, and AMD. Many of these companies were hitting their 52-week low, and people are asking me, do these count as losers and dogs that I should cut loose from my portfolio? No, I think that the blue chip stocks are long-term investments. If you are swing trading them though, then perhaps yes, many of them were clearly in decline. And I think a perfect example of that was the call that I made on Google about 2 months ago when it was between 110 and 120, and I advised everybody that it would hit my target range of the $90 area. And a lot of people were doubting me and even laughing, putting laughing emojis in the comment section. Well, here we are. We got to that target area. So you have been pre-advised that many of the blue chip companies were in decline, and you could have chosen to DCA into them or sell your bag and buy at a better price later. I do not view them as dogs that need to be cut loose from your portfolio. I do think that many of the blue chip companies are very likely to have a V-shaped recovery because of their quality. On that note, I want to talk about the opportunity ahead, and by doing that, I want to discuss a chart on sentiment. Sentiment is the optimism or negativity that people have towards the market. Well, it's at a record low. Matter of fact, a recent study showed that bearish sentiment in the market is at an extreme record low, the sixth highest reading of bearish sentiment by investors. And what I want to point out in particular is that every single time we've gotten to this level of bearish sentiment, historically the markets have had an above average return within 6 to 12 months. So to make that case even stronger, this is one of the absolute lowest historic bearish readings that we've had. We played things smart this week and everything played out well. For such a rough week, my swing trade account actually ended up in the green. Don't forget, I predicted Monday may be bullish. If you guys want to be part of my community, you can find me in the comments on YouTube. But of course, there's a ton of scammers there. They want you to WhatsApp, Telegram, and Instagram them. They're pretending to be me. It's not me. The better place to reach me is on the Moomoo app. If you guys are new to Moomoo, there's a link in the description of the video. They have an amazing offer right now. You guys can get up to 15 free stock, but if you put in just $100, you can get a chance at 6 stock valued at $2,000 each. That's one way of getting your account in the green quickly. Click that link, open your account and fund it, and come over and find me on the Moomoo app under the Discover tab by searching Stocks with Josh. As you guys can see, I'm traveling. I'm going to be in San Diego, Los Angeles, and San Francisco over the next 2 weeks, but I will be making videos. If you don't want to miss out on these calls that have been going very well, then hit that like, subscribe, and the notification bell. Going into Monday, I'm keeping my eye on 3 gaps in the SPX, which measures the S&P 500. I would like to see the market fill those gaps to the upside. Even if these markets continue to the downside, I think after 4 days, we may get a relief rally. I think at least a retest back up before going down. We're gonna play it one day at a time next week. I'm gonna leave you guys with this thought. A quick comment on the Fed. I think that he is bluffing. I think his ambitious goal of out-hawking the hawks and getting the interest rates up to 6% potentially isn't going to happen. I think he's behind the curve. He's gonna run out of time. I could be wrong, but we'll have to see in the coming days. I think we may get another 75 basis point ahead of us. But if I'm right and the market expects a 75 basis point and it goes with a 50, I think this market is once again going to interpret that as a pivot, and we're going to get another rip your face off bear rally. So I want to remind you guys, this is for educational purposes. I'm not advising you to buy, sell, or hold a stock, but you know I love you. I'll find you in the comment section. I'll see you guys again tomorrow. Peace and blessings, my friends. Take care.